Well, the wheat and the corn market have been on both sides of unchanged, but the soybeans are leading the way higher. Hello and welcome to the Market Day Report. I'm John Jenkinson, and now let's go straight to the board and get the latest on the numbers. We'll start with the corn market here first, and the nearby March contract is now up 1/4 cent at 3.52 3/4. New crop December corn is up 3/4 at 3.86 3/4. March soybeans up 6 1/2 at 9.83 3/4. September soybeans up 6 1/4 at 10.03 1/2. March Chicago wheat now up 3 1/4 at 4.26. And the new crop July is up 2 1/2 at 4.51 1/4. New crop July Kansas City wheat is up 1 1/2 at 4.59 1/2. And by the way, we were higher on that contract last night on the overnight trade. Minneapolis wheat for July is up 3/4 at 6.25, but the nearby March contract still down 1/2 at 6.08. And for the cotton, March is up 5 points at 83.47. The new crop December cotton up 7 at 75.82. Let's go to the edge of the trading floor in Chicago at the CME Group. Scott Gecas with Longleaf Trading is here with us. Scott, what are you hearing on the floor of the trade today? Is this mostly a South American weather market at this point?
Yeah, the main focus just across the board is going to be on the weather forecast in South America. You know, trading here is really light. There's really not a lot of going on today. It's pretty quiet. You're seeing not a lot of volume being traded across the board. You know, but yeah, like you said, yeah, the main focus just across the board is going to be, you know, the weather in South America.
Is there any talk about demand going forward from here and how competitive the United States is globally?
Yeah, there's definitely some demand coming in play. You know, with the weaker dollar, you know, you're going to see exports be a little bit higher. That definitely has a direct correlation with the export prices and stuff like that. So, you know, world stocks with the soybeans are at record highs. You know, we expect them to increase going into the rest of the year. Traders are net long, but they are decreasing in contracts. In the soybean market, the trend is still higher. We're going to still be bullish above 980 or so.
Has this run up in the price in the soybeans today shown up in larger farmer sales or more frequent farmer sales today?
I would think so, yeah, and I think that's why you're seeing a little bit of support here in the soybean market.
All right, let's take a look at the dollar. You mentioned the dollar and the competitiveness and where that leaves us on the global scale. Let's take a look here. And earlier, this dollar was a little bit weaker, and we're going to have to call this mixed right now, where the March dollar index is down 30 at 93.40. June, though, is up 50 at 90.070. And September dollar right now is down 180 points at 89.500. I want to go on over here and talk about this crude oil market also, Scott, just a little bit. February crude oil down 17 at 63.20. March down 11 at 63.20. So this market, just kind of here over the past 2 to 3 trading sessions, just now kind of seems to be settling into a range.
Yeah, and that's expected with everything going into oil. You know, you're still seeing a lot of news stories coming out saying that the U.S. is going to take over Russia as one of the leading producers of oil. So, you know, if that's going to be the case, you know, you're going to see a little bit of sideways move here too.
All right. Scott Gecas here with us. And Scott, when we come back, we need to get into the livestock trade and find out what's going on there. So we'll do that next, coming up here on the Market Day Report. As far as the livestock trade is concerned, let's start with the live cattle complex here. And then earlier, we were up over $1 on the front 2 contracts. We backed off of that just a little bit for the April. Right now, February live cattle up 132 at 123.22. April live cattle, though, up 92 at 123.65. And June live cattle up 67 at 115.40. For the feeder cattle market, January down 10 at 147.85. But we're really watching that next front contract. That's where we see most of the trades. It's March up 30 at 145.90. April feeder cattle up 43 at 146.50. May feeder cattle up 45 at 146.25. As far as the hogs go, it's February down 22 at 71.85. April hogs up 2 at 75.52, and May hogs up 13 at 80.05. Let's go back to the edge of the trading floor in Chicago at the CME Group. Scott Gecas is here with us there at the edge of the trading floor. Scott, last week, $3 higher for that cash cattle trade. But from what I have been hearing from other analysts and also from USDA, that maybe the show list wasn't completely cleaned up that last time around.
Yeah, and that's what we're seeing. You know, Friday, you've seen the cutoff values come in just slightly, you know, still pretty high. You know, cumulative sales just year on year is up about 20%. You know, production is still going up a little bit higher. Traders are still net long. They are decreasing contracts, so we are going to stay bullish above 122.
That's pretty interesting. When we look at the, you mentioned the cutouts, and the midday cutouts here were both a little bit lower on both the choice and the select. So we've seen this start to soften here just a little bit. The choice down 25 cents. The selects were off 54 cents at 199.62, with the choices being bid at 204.61. So this beef cutout here, is this an indication that maybe we've taken the market as high as it'll go this time around, at least as far as the consumer is concerned?
Well, we'll see. You know, the consumer demand is supposed to pick up here in the second half of January, so, you know, we're going to wait and see what those numbers are going to be looking like. But, you know, just across the board, you know, I would expect demand to increase just year on year going forward, so we're going to see how that works out.
Is demand also going to be the key for the pork complex as well? Because
for
here
sure.
at midday, you know, the cutouts for the pork, just a little bit weaker on most of those, with the exception of the belly market. The belly market up a little over $4, so seems to really be leading the way higher. The ham's down $1.61, the loin's down 95, the carcass is down 11, but that belly market $4.55 higher.
Yeah. You know, and with the cutoff values with the hogs and stuff like that, you know, they were the highest since December 12th. So even though they're in slightly, they're still at record highs. So, you know, supply is decreasing a little bit. You know, we're going to see in moderate temperatures that should help things out in the next few weeks here. The slaughter rate is up slightly from last year. You know, production is still steady though, so traders are net long, increasing contracts. You know, stay bullish above 72, walking up. It did break that 72 level. It could be reversing that uptrend, so we got to wait and see how that plays out.
And that's basically what that nearby chart is telling us on that lean hog contract?
That's what we're looking at, yes.
Okay, interesting. Any other thoughts on the outside markets? You know, the dollar here is just a little bit weaker today as well.
Yeah, I mean, everything as far as the stocks and everything else globally, it's all going into play with, you know, the government shutdown, the NAFTA talks, you know, the soap opera for global economics and policymakers. I mean, it's ongoing. I don't see that end anytime soon. So we'll see how that plays out in the near term.
Okay. Scott Gecas here with us at the edge of the trading floor. Scott, thank you very much. We always appreciate your time. And as we wrap things up, let's go back and check out what's going on with the soybean meal market. Earlier, when we saw this there during the break, it was quite a bit higher. In fact, right now, the March is up 640 at 338, and May up 590 at 341. So kind of a big jump there in the soybean meal, and that could also be lending a little bit of support to the soybeans as well.
All right. Thank you very much for the rundown, John.
Yes, ma'am.